So moving away from the challenges and looking forward, and for our audience thinking about this topic of wealth next year, what are some of the opportunities that you're seeing with through your lens and your background?
Well, I think you've got to look at it with this lens that, the money, like for instance, gold isn't going up. Things aren't going up in price. It's the value of your pound or your dollar that is going down. And I think it's really important to pull across the veil across our eyes and see what's really going on, because it does inform so many different decisions. I mean, in the US, for instance, their national debt is at $38 trillion. I mean, if you convert that into seconds, 38 trillion seconds ago, that's like something stupid like 36,000 years ago. I mean, it's a huge, huge number. It's 120%, I think, of their GDP. And they've managed to get away with that because they were the reserve currency of the world. But they've got, on top of that, $200 million plus of unfunded liabilities with Medicare, etc. And, I think, what is it? 30% of all dollars in existence were printed since 2020. Like that just shows you why inflation is happening so much. And also the CPI figures, you've got to ignore those, because at the end of the day, they're very much an average based on a basket of goods that suits the government to use. But of course, we've all seen, for certain, depending where you are, where you sit in the economy, your inflation rate is very different. I mean, if I want to go on holiday now to some of the hotels that I was going to just 5 years ago, those hotel prices have like tripled or quadrupled. But the UK is no different. The UK national debt's at 3 trillion. Our economy is nothing like as big as the US. That's a huge number for the UK. And we saw the whole pension liability thing blow up with Truss was in power and stuff. And she was just trying to do something similar to what the Americans wanted or were doing, and obviously couldn't pull it off. But this is really serious. And I think when the US catches a cold or gets a bug, the rest of the world catches a cold. And, you've got to take this really seriously. The US has got to nobody is buying US treasuries right now. Long dated treasuries are not being bought. And so the Fed has had to step in and started buying them again. So they've gone from tightening and reducing the amount on their balance sheet to now actively going into the market and buying those treasuries, because no one else is. The only treasuries that the US are able to sell are short dated ones. And so you've got this continuous reissuing of treasuries just to maintain their position. And we know that the debt's got to go up and up and up. Their interest bill alone is like $1 trillion a year. And so what are they going to do about it? Well, this money printing is going to continue. And I think the only option for them, and I think the administration quite clearly come out, and although they might not have said it exactly, but you can tell that they're leaning into the idea of printing more money. Because what does it do? Not only does it decrease the value of your pound and your dollar, money printing also therefore decreases the debt burden that you've got. So there's no reason why, and there's no surprise then in this country why everybody wants to buy houses, because of course those houses go up in value, and the debt that you borrowed originally becomes worthless over time. And so gold, for instance, flying, gold 48% up in 2 years ago, 50% this year, up nearly 100% in the last 2 years. But again, it's not the gold that's going up. And I've got to keep banging this home, because none of you listening to this, or very few of you, will be used to this idea. You're constantly measuring everything by the pound. It's like going to bed at nighttime and looking at the thermometer and it says 21 degrees. And then you go upstairs, you come down in the morning, it's freezing cold, and yet the thermometer still says it's 21 degrees. That's because you're measuring it by that thermometer. In the middle of the night, someone moved the axis. And that's what's happening with the central banks. So all I'd say is that obviously I think you can't look either at gold market as an example using normal analytics and bear and bull market analysis. This is a structural change that's happening in the world. The US is purposefully happy for its dollar to depreciate. They're happy for gold to go up. I haven't been assassinated like Gaddafi was when he decided to come and bring gold to the world. The Americans are happy for their individual citizens and stuff to own gold, hence why incredibly 5 states have now passed laws this year to make transactional gold legal tender. But this is creating systemic risk within the system, within the treasury system, and stresses within the treasury system. There's also risks and stresses therefore in the banking system, and that moves on and out into the whole shadow banking system. So all I'd say is whatever you're doing with your money, I mean, Morgan Stanley, their chief investment officer, came out just recently and said that you need to have 20% of your wealth in gold. I mean, that's never happened.